Joining us now is David Katz, Chief Investment Officer at Matrix Asset Advisors, and Tom Lydon, ETF Trends Editor. Guys, good to see you. David, let me start with you. You're a guy who has to be in the market every day. You're a Chief Investment Officer. You got to buy, you got to sell. What are you doing in the middle of all this?
First and foremost, turn down the volume, put investing in perspective. If you have a 3 to 6 month time horizon, the economy is getting better. Corporate earnings have been wonderful. People have been looking for a 10% correction. You've got that 10% correction. We think it's closer to the end rather than the beginning. We would be buying into this weakness. Pick stocks you like. If they're selling off $1.50 or $2, buy them. By the time things feel better, stocks are going to be a lot higher.
All right, Tom Lydon, you heard David say buy on the weakness. Do you agree with that point of view? That is really the critical question right now. Should investors, particularly individuals, get in on the weakness? What's your take?
Absolutely, Larry. Larry, you know, investors have been challenged. They've been listening to Goldman testimony, watching floods, watching riots in Greece, and then an apparent aberration or a problem with market trading. Today, what the president did is he allowed investors to take a deep breath, provide some calm, give the economic numbers equal weight, and, you know, nobody's talking about the performance of the stock market regarding earnings. We've had great earnings reports, but nobody's talking about it. And then finally, as Matt Nesto mentioned, we have not yet violated the 200-day moving average. It went above last summer, and it remains above, and as long as we're above, it should be smooth sailing going forward.
Tom, you specialize in ETFs. Are there ETFs that you should avoid when there's high volatility because of less liquidity, or are there ETFs that you can benefit with in these kind of markets?
Well, all markets and all ETFs had some liquidity issues yesterday, but that's a whole other issue. Specific areas to avoid are obvious right now. Euro currency ETFs, Euro market ETFs, long treasury ETFs, as we're probably going to see higher interest rates. But if you're looking to get into areas, small caps over large caps right now, as small cap stocks are in a much better position to ramp up during this improving economic time.
Dave Katz, you're buying on weakness. Can you tell us where, please?
We like technology. Dell, we think, is at a great price. It just sold off about 10% in the last week. Microsoft Business couldn't be better. You're getting it also at a great price. We like the energy stocks. A lot of them are doing very good things like Conoco and Devon. And the banks have been through the worst. A company like Bank of America just had a big sell-off. State Street, great prices, very favorable outlooks.
All right, gentlemen, thank you very, very much for the update.